This is NBR Today. Well, is the Reserve Bank about to change its mind over the OCR? Last November, when it last reviewed interest rates, it said it expected to keep the official cash rate at 1.75% through this year and into next. But Prime Minister Jacinda Ardern says the International Monetary Fund has downgraded its 2019 projection for world growth from 3.7 to 3.5%, and advanced economies are only expected to achieve growth of 2%. That international uncertainty might mean the Reserve Bank will make an interest rate cut at some point this year, rather than simply keeping the OCR on hold. The Reserve Bank's next monetary policy statement is due out Wednesday. NBR's political editor Brent Edwards says whatever happens, interest rates will continue to remain low for some time to come. Australian investment manager Tanara Credit Partners is claiming first mover advantage in setting up a New Zealand office to offer mid-sized corporate and private equity companies an alternative to bank credit. Former BNZ corporate finance head Will Carnahan is heading the New Zealand office of Tanara, which raised a $300 million Australian dollar fund in 2017 to lend to companies secured against their cash flows, filling a gap left by the banks. The cornerstone investor was 60 billion Australian superannuation fund UniSuper. Mr. Carnahan says until 2 years ago, all corporate loans were provided by the banks in Australia and New Zealand, but that's changed significantly across the Tasman. He spoke to NBR's Fiona Rotherham about how the timing is right, given the retreat from corporate lending by banks.
The timing is fantastic, really. If you look at what's happened with the Banking Royal Commission in Australia, the findings from Commissioner Hayne and the associated recommendations to the banks, the market is almost ubiquitous in saying that this will lead to tighter capital restrictions, a pullback in lending. The New Zealand banks are all subsidiaries of the Australian banks. The expectation is absolutely that those same restrictions will flow through to New Zealand.
Shareholders in Contact Energy will get a higher half-year dividend, with a promise of increased payouts in future, as asset sales and strong cash flows boosted the power company's balance sheet. The electricity generator and retailer, whose power stations include Clutha Hydro Dams and Taupo geothermal plants, reported a net profit of $276 million for the 6 months to December. The result was boosted by $167 million of gains from its sale of the Ahuroa gas storage facility and its rock gas business. But the profit from continuing operations was also more than double the previous year. Revenue of $1.3 billion was up 16% on the same period a year earlier. Wine grower Kirsty Harkness is concerned warmer temperatures and less frequent rainfall may put New Zealand's $1.7 billion a year wine industry at risk, and she's trialling planted hemp as a mid-row cover crop. Ms Harkness is licensed to harvest the heads for seed or oil and then plans to mulch the plant back into the vineyards under the row. Hemp is drought tolerant and does not need supplemental irrigation. Ms Harkness says a large New Zealand wine company has also agreed to test whether the terpenes in hemp changes the flavour of the wine. Callaghan Innovation sees potential in the idea and has given Ms Harkness a Getting Started grant. New Zealand's early-stage tech firms may have a bridge to Silicon Valley via new venture fund QuidNet Ventures. Co-founders Mark Bregman, Elizabeth Van Ruyen and Andrew Balgani are raising $40 million to fund about 10 investments in New Zealand technology startups. The 10-year closed-end fund is raising a third of the money in New Zealand and the rest from overseas. The trio is looking to tap into the enormous talent in New Zealand's fast-growing tech sector, with a focus on companies wanting to move into the US market. Mr. Bregman says New Zealand startups lack strong institutional investment, so they need to move to a big market such as the US, and they often need help.
But there's a critical shortage of capital for seed and Series A, the kind of $1 to $5 million investment. But more importantly, I think where there is money here, it may not come with the kind of on-the-ground help to enter into the U.S. market, introductions to customers, advice on how to go to market. The U.S. market, on the face of it, might look similar, but the scale is so different, the complexities are different, and so a lot of companies need help getting started when they enter the U.S. market.
And to tomorrow, we have the latest in the multi-million-dollar Feltex court case, where investors are likely to argue their compensation claim on two fronts when the second stage of the High Court civil trial takes place in Wellington in November. So for more on that and other stories, just head to our website. Have a great evening.
To unlock your 2 free articles a week, head to nbr.co.nz.